To be speaking about today is how to invest in the property market in 2023. Hopefully some of you know who we are, and for investors or prospects that don't know who we are, we're Hunter Jones Group. Thank you for spending your time this afternoon and this evening to come on and let us explain what we do as a business and how we can help you moving forward. So today what I'm going to do is I'm going to be hosting the webinar itself. I'm going to introduce you to Hunter Jones Group. I'll do an introduction about myself as well. Some of you may know who I am. Some of you might not know who I am. If that's the case, I'll be happy to explain what I do at the company and what the company's done. And then we move on to the current state of the property market. And some solutions that I see and the team see in the market, and how we can overcome them. And a little bit about the alternative property market, what we specialise in and we have done for some time. And then we move on to an offer that we've got on one of our options that we're working on at the moment. So an introduction to Hunter Jones Group was formed in 2013 by myself and co-founder. What we specialise in now is property acquisitions, structured investments, and some lending facilities for their various different property developers. Property acquisitions, quite frankly, are buy-to-let properties. People like yourself, like myself, that are property investors that want to sit back and, have a buy-to-let, manage that themselves. We've got a team over here at Hunter Jones Group that can help you buy off plan so that you can reap the benefits of the uplift. And then structured investments are investments where we work with various different various different property developers, where we team up with investors like yourself that can lend money to them developers for a fixed rate of return back to yourself. And our lending facility desk is just a team that works with property developers, again, that are looking for bridging finance and some commercial finance, where we put them in touch with people like some bridgers and other companies that are available to lend funds to that developer on the right terms. Myself, some of you may know who I am, some of you may not. I'm Reece Mennie. I'm the CEO of Hunter Jones Group. I have a few businesses in my portfolio. The main business is Hunter Jones Group, followed by my property development company, which I started in 2019, which is HJ Collection. I've then got a marketing company, which is Big Ass Marketing, that looks after all of the marketing aspects of all of my companies and other companies that we work with, so SME businesses across the country that come to us or come to my marketing company to look for some marketing. So, broad portfolio. I've also got a boxing academy that I'm involved with locally in Essex, where we take youngsters right away from the start of their boxing career and hopefully turn some of them, if capable, into professional boxers, which we have done previously and we continue to do. But as I said, the main core of my business is Hunter Jones Group and HJ Collection. Myself personally developed over 1,000 units, GDV of around 350 to 400 million. I've done 30 projects in the last 5 years alone with development partners and on our own through HJ Collection. So that's myself. I've also got a podcast, which is Many Talks, where I interview serial entrepreneurs, some footballers, some like-minded business people, some people in the property sector, just people in different walks of life that can give some information back to anybody that listens to the podcast. So feel free to download that podcast. It's Many Talks. It's on Apple, Podbeam, so you can get it on all of your devices. Easy to download. It's also on YouTube as well. So moving in, the state of the property market at the moment, most of you would have seen, you can see this diagram, the GDP value, mortgage rates have gone up, inflation's gone up, property market, the property prices have, stayed stagnant or in some areas drop slightly, depending on what areas you're looking in. But more importantly is, mortgage rates and inflation. Every one of us that's on this call or on this webinar would have noticed in some form inflation's gone through the roof and is continuing to do so. The outlook for 2023 and 24, rise of bank debt, recession, the highest since 2008, 2009, inflation up 10%, they say, high energy costs, increase in business entering into administration. So if you look at it as a whole in the property market, you could look at it and think, well, it's quite a gloomy place. What should I do? Is it a good time to do nothing? Speak to a lot of clients and prospects that say, is it really the right time to make an investment right now? Should I sit and see what's going to happen? Or, what do you think? However, if you look through the bads, what we just spoke about, where we've got inflation at 10%, high energy costs, rise in mortgage rates. Mortgage rates have dropped below 4% and remain steady. Inflation is decreasing slightly, and house prices have fallen, but only around 3.7% since August 2022. So all of the stuff that's got a stigma about it, if you dig down into the real roots and causes of what is actually going on in the property market, is it really as dark and gloomy as what the media and other people foresee? And what's the future hold? Key challenges, in the UK right now in the property market, 350,000 houses shortfall every single year. Okay, so in this country alone, we need to build 350,000 homes every year just to keep up with demand in the country. Okay, that's a lot of homes, and we are nowhere near as a country, producing anything like that. There's vacant buildings, the death of the high street, hybrid working, overseas working now. And one of the bigger challenges is slowing down planning processes. So, for developers and for people that are in property, your uplift is where you're purchasing, how you purchase, and once you've got planning permission. There's a lot of delays in the planning application process right now. So they're really, for a developer, the key challenges which I see them facing. As I said earlier, the problems that are in the property market, there's decisions that we can make. What is the key to making the right decision at the right moment, which in my opinion is now? Okay, diversifying your risk is one option. Okay, number two, you can do nothing, so you can sit on your hands like people are saying. Is it the right time? Is it not the right time? Or you can recognize the opportunity for growth right now. And if you're looking in the right areas, there is some fantastic opportunity for growth, but it's making sure that you're in the right areas. How do you, or why would you diversify your portfolio? How can you? You can put it into a mixed portfolio, so diversification. Okay, buy to let delivers long-term returns and you own the asset. Alternative property investments delivers short-term returns, okay, without the hassle of owning an investment. So that's without the hassle of everything that goes with it, and create a recession-proof approach in terms of making sure, that you are taking action. Because if you are sitting on your hands right now, and we spoke about inflation and other things that are going up in the economic climate, if we're sitting on our hands and we're leaving our funds where they are, we're not making any money with them because inflation's going up and nothing is happening with our money. We're not using it wisely and putting it in vehicles that are making money. So that's why it's always key to keep looking, even though there's some, is it the right time? Is it the wrong time? It's gloomy. The property markets, is it going to crash? Is it falling? There's always opportunity in a downturn. So what are property bonds? What is a structured investment? And as you can see, as we've gone through the slides, we're now coming on to HJ Collection, which is one of the property developers that Hunter Jones Group raises money for. Now, I own HJ Collection and I own Hunter Jones Group. So what I want to explain to you is, through what we've just spoke about, how us at Hunter Jones Group could introduce you to HJ Collection, and HJ Collection can give you an opportunity not only to be able to beat inflation, but make money in a less hassle way than buying and owning an asset outright. Okay, what is a property bond? Property bond, quite frankly, is a debt instrument. Okay, you lend as an investor your money to a property developer for a fixed time and a fixed coupon paid back to yourself. Security will be varied in different instruments that you're being involved with. Okay, security can be a debenture over the assets, a fixed charge over the assets. So you have adequate security depending on what one developer is offering at that time. Now, just to go back, HJ Collection is not the only property developer that Hunter Jones Group introduces to. We introduce to a few other developers as well, and you can speak to my team regarding them other developers and they can explain the process. But all property bonds are structured this way. So when you're looking at a property bond, these are the key facts. There's no stamp duty or fees for investors. Okay, the security on the different bonds will be different, the term will be different, and the interest rate will be different, but they will all have them key fundamental things in place. Buy to let versus alternative property. I've really just covered this, but in terms of buy to let, okay, you're holding you're holding, in my opinion, the hassle that comes with holding the asset. Boilers going wrong, tenants causing problems, inflation, so tenants not being able to pay, leaks, boilers, tax that goes with buy to let. I'm a landlord, very big landlord. A lot of our most successful clients that work with us was landlords or are still landlords. But what they find is that they can take a percentage of their portfolio and pull it into an alternative property investment that gives them less headache. So buy to let versus property investment. Let's look at buy to let, the pros: long-term asset, security of the property itself, the problems. Okay, it's not recession proof. Current inflation's looming, so the ROI is not as favourable as it was. Responsible for your tenants and all your associated costs, and you've got your capital gains. And obviously, as a private landlord, the tax implements that have changed in the last few years alone has made it not as appealing as it once was. A structured investment, or a property bond as they call it, we look at some pros. Okay, the pros is a fixed return, okay, averaging between 8 and 12% over a fixed term, zero hassle from any tenants, zero maintenance, security of investing the same as a buy-to-let because you have security over assets, recession proof because whatever happens, your investment is a fixed rate of return. If the developer that you're working with or the vehicle that you've invested into defaults in any way, you are still due the same amount of returns depending on whatever happens in the world. So it is, as far as we're concerned, a recession-proof investment. The cons, okay? Important to make sure that you do thorough due diligence on the structure of the property bond that you're getting involved with, what the security is, what the asset level is, the amount of time that you're in for, and what the rate of return is. So how can HJ Collection, how can we help? We've gone through, how we see the problems in the property market at the moment, inflation, mortgage rates going up. So how can the reason that you've come on here today is to hear how we believe that we can help you at Hunter Jones Group, beat what's in the marketplace and how it's working. And what I wanted to do this webinar about today was HJ Collection and how me as a property developer and me as HJ Collection and my team can help you achieve what you're looking to achieve. We are a nationwide developer. Okay, so we specialize in permitted development rights. So we convert office space into residential. We do that across the whole of the UK. We've returned over 10 million to investors already alone. We've got fixed security, so that's a mixture of charge and debentures over the developments that we have, that we purchase and we're converting. As I said, thorough due diligence on my slides before is what an investor needs to do before making any decision into any property structured investment. And I would always advise that. So the fixed security is something that you need to look into. Me or my team can show you the documents and the paperwork to show you what the security is in this particular project. But as I said, we're a nationwide developer. We started predominantly in the north of the country. We've now, worked our way down. We're doing a lot in the south as well. So, we are predominantly all over the UK. As I said, just a slide here on what we've done. 10 million paid back to investors, 4 new acquisitions in the last few months, and a record growth establishing 70 million GDV in pipeline. These are all articles, guys, that have been in the public domain, and anybody that you're talking to from my team will be able to give you information on these, and you'll be able to find them on the net anyway, just by looking us up and seeing what we've done. A timeline of HJ Collection and how it's worked. So as you can see, 2019 is when we started. We purchased 2 assets when we started, which was Yorkshire House and Cleveland Street. And this is when the work started, and we bought Crown Buildings as well, which is in St Helens. Throughout August 2020, we're up to now, we raised 5 million from investors. We completed Yorkshire House 50% in July 2020. Moving forward, we completed Cleveland 50%. We raised 7 million from our investors around September. We then bought another asset, which was Braintree, which is St Michael's House. And as you can see through the timeline, it brings you around to what we're doing and how we've done tenants. If we're moving forward into June 2021 in Cleveland Street, the commercial units rented out in Barnsley in Yorkshire House. And then where we refinanced the 2 properties, which was Cleveland Street and Yorkshire House, we was able to pay back 3.4 million to our investors. We then looked at a site in Preston that we didn't go ahead with, but it's on the timeline. The initial fund closed, which was the first one, and now we're on to HJ Collection 2. And as you can see, as we move forward, some other sites that have been purchased. Moving into 2022, we purchased Wilberforce Court, work started. Walton on A's, which is moving very well. And then the new loan note, and we've got 4 sites in review in 2022, paid back 7 million to investors. We purchased another site in Hanley, which is Stoke-on-Trent, which is up north. Named Property Developer of the Year, the National Landlord Show at 2022. St Michael's show flat completed, which is in Braintree. Crown Buildings is now in its final stages of being completed as well. We now have 3 sites under review, and we've got more sites that we're continuing to look into and bring to fruition. Taking a look into the future, these 2 sites is something that I wanted to earmark, because what we do here at HJ Collection and how we know that working with us, we can show not only a fixed return, but how we can make money as a business. And what I want to bring you to here is two options that we're in legals with right now, one in Ipswich and one in Lowestoft. And you'll see, if you can see the numbers, if we start with Ipswich, we purchased Ipswich for £890,000. When we purchased that site, a valuation was done by a Royal Chartered Surveyor, and the actual value of that site was 1.4 million, just over 1.4 million, as you can see. So before we done a strip out, before we done anything to that site, just by specifically owning it, we'd already made 37.6% for people that wanted to work with us on that site. So as you can see, how it works is investors lend us the money into our SPV, and the assets we purchase go into the SPV as security. So on this site alone, you can see without us even doing any work whatsoever, we've made 37.6% return. On Lowestoft, it was an even better deal by my acquisitions team, a purchase price of 480,000. And guys, all of these figures can be backed up and supported. So you don't just have to take my word for it. We've got what we paid for it, the actual valuation, Rick's Chartered Surveyors, that we're happy to share with you to show you, these numbers are what they are. And the purchase price of Lowestoft, 480,000, valuation of 1.2 million, 62% below market value. Now, you might be asking yourself, well, you must just have a very clever acquisitions team, or it's not that. How it works and what we've built here is we've got a team, and as we went through the slides earlier, you'd have noticed that in the property market, working from home, in any downturn, there's always downside, but it becomes opportunity. And you've probably yourself been walking through the local high street and looked around and gone, wow, there's a lot of shops empty. There's a lot of office space that's not taken above shops anymore. And the reason for that is because work from home. A lot of people are doing hybrid working, or they're just working from home, and, that's fine. So what that's leaving is a lot of commercial units vacant. And what that does is it allows us to have the opportunity to be able to go in and negotiate a very good price, to be able to take these empty office space. I mean, Ipswich itself was an old Argos building, and Lowestoft was actually a Tesco's building. So Tesco's was in Ipswich. Tesco's was in Lowestoft, and Argos was in the Ipswich building. Now they're both not there anymore, but that's give us the opportunity to be able to go in and take them sites and be able to show an uplift like that without even doing any work. And you can see at the bottom the GDV of them two sites. So Ipswich, once we are completed, will be valued around 3.2, and Lowestoft, once we're completed, will be around 3.6. The start time on them sites will be within the next 2 months. Strip out or commence, and we will turn them sites around in a 6 to 7 month period from the day that we put our contractors on site. From the day that we're finished will be around 6 to 7 months. So just before I move to the next slide, what I want to do is I just want to show you a video, just because a few of you might have been involved in property development before, or refurbishments, or other stuff that goes on. And don't get me wrong, some do run over 6 or 7 months. But if it is a really vanilla site where we're just building boxes inside boxes, so we've got a nice square site that we've purchased, and it's very easy to divide up and move forward, we've built the team to be able to crash these out really, really quick. The site that I want to show you next, which is a little video, is of Stafford, which is one of our sites that we've actually been on site for 1 month physically, just over 1 month now, coming up to 1.5 months. And I want to physically show you a little video so that you can see the start of Stafford and what we've done within a month. And you'll see in there that flats are now starting to be formed within the first month. We're on to first fix. And by the end of this month, we would have started plastering as well. So the next video will show, not this video, but the next video in the series will show the plastering started. But for now, just to get a feel for how quick our team's moving, and what we're doing. Let me just show you this this video. As you can see there, that's the video that we've done, and you can see the moving through the stages. You know, there's where it started, the strip out, and then you can see that flats have been formed already inside. The pink boarding, this fire boarding, goes up. You can see at the back there the insulation that goes behind the fire boarding. The tracking there is where the flat starts. And you can see throughout, and that's from being in there for 1 month. The full video of this will be out. I'm just looking at the marketing team in the next couple of days, or maybe a week. So you'll be able to see that. But just moving back to these two sites, so we're in legals with these sites now, because this is because you've come on today. And what I want to do is thank you for coming on. I'm going to take some questions at the end.